Kia ora, and welcome to my Saturday Soliloquy for Saturday, December the 7th. This is an experiment I'm doing. I hope you enjoy it. This is my end of the week summary of the things that mattered. There's a much more detailed set of charts and quotes and various things that will go out with an email newsletter to all subscribers. Firstly, I wanted to focus on the speech or the interview that Christopher Luxon gave last Sunday with Jack Tame, in which he detailed his economic strategy, which was to take New Zealand back to 1991 and to mimic the austerity-led practices of Ruth Richardson. He said we needed to learn the economic lessons from 35 years ago of fiscal conservatism, cost cutting to get inflation down, and that this wasn't austerity. It clearly is. Treasury has told the government so. And the evidence, as I detail in the email from the IMF, the World Bank, and the OECD, is this sort of austerity led strategy to try to grow the economy simply doesn't work. In fact, it's counterproductive. It makes the economy smaller and the public debt bigger relative to the rest of the economy. I wanted to also to talk about the news that emerged from the government around the climate this week, including Todd McClay's comments that the government would not buy emissions credits overseas to help meet its Paris climate agreements, and that is because we need them. So 90 million tonnes is the amount of credits that we're going to have to buy to meet our Paris commitments, according to the official advice. And the assumption was, from both sides of politics for the last decade or so, that we would buy credits internationally to meet those commitments if we didn't do it ourselves. Now we're behind, and Treasury has estimated buying these credits over the next decade or so could cost anywhere up to $20 billion, depending on how that is priced. The key thing here is that um, Todd McClay is the Trade Minister and the Agriculture Minister, and he is essentially saying that he will renege on a couple of free trade agreements, let alone the Paris targets, because the EU free trade deal, or trade deal, it's not a free trade deal, and the UK trade deal both include clauses that we abide by the Paris commitments. In my view, that's a reckless and dangerous and financially risky way for the government to operate. And I'm surprised that the big end of town, the big corporates who have all committed to the Paris agreements and often have investment mandates and are forced to report on progress towards net zero, are not calling bullshit on the government. Because remember, since the government's been elected, almost all of its policies have increased forecast emissions. Its essential approach until now has been to essentially gaslight us, to say, no, we can have both at once. We can increase our emissions and we can meet our targets. And the link in the middle is planting lots of trees and doing some carbon capture. Although ironically this week the government also announced that it was going to reduce the ability to plant trees on good farmland. Although interestingly, it also said it wanted to partner up with private firms to plant pine and native forests on Crown land. So we need to call bullshit on this policy. It is reckless and dangerous, and I'm surprised that corporate New Zealand, New Zealand Inc., bond investors, the Reserve Bank, the Financial Markets Authority, the Earthquake Commission, or the Natural Hazards Commission, hasn't jumped out and said, hey, you're exposing the country to financial risks, let alone reputational and trade risks, and you need to get back with the program. Thirdly, big piece of news this week was the halving of funds to pure research through the Marsden Fund and the complete removal of funding for social sciences and humanities research. New Zealand's economy, I call it a housing market with bits tacked on, is designed to be a low wage, low investment, low R&D economy where you grow the GDP by importing cheap labour and you keep taxes low, because the main aim as a government is to reward homeowners who are wanting more leveraged and tax-free capital gains on rises in residential land prices. And the Marsden Fund announcement really plays into that. Another evidence-light policy, complete surprise to everyone in the sector, and a major blow. And I've included some quotes in there from the various academics who have followed this. Yet again, New Zealand Inc.'s structure as a housing market with bits tacked on, an evidence-light, low-tax, low-investment economy where our R&D spending is way less than half the OECD average. We shouldn't be surprised when our productivity is weak. Speaking of productivity, this week the OECD on Thursday recommended that the government break up the electricity gentailers. So that is the three 51% state-owned gentailers of Meridian, Mercury, and Genesis, and Contact, which is fully privately owned. The OECD said this would increase competition and improve productivity. And this is something that energy poverty, anti-poverty activists, plus electricity industry independents have been calling on the governments to do for years, and that's both Labor and National. Of course, Labor also had electricity price reviews and talked about doing things, but didn't. And so we'll see whether or not the government, and in particular Treasury, allows something like this. Because remember, the profits and the dividends coming from those three gentailers are much larger than they should be if it was a truly competitive market. But of course, that again allows the government to run a low tax, low public debt economy. Also this week, we got news from Chris Bishop, more details on the government's infrastructure funding and financing strategy. Remember, I have this theory of everything, which is that it's all about housing, and in particular, it's all about infrastructure funding and financing. You don't get homes without pipes and roads and electricity and schools and hospitals. Half of those costs come from the central government, half from councils. For 30 years, we've run, again, low tax, low investment, low infrastructure policies, along with high population growth, which has meant that we have a $100 billion infrastructure deficit. Now, there's various ways to fill that deficit and to actually build these things. You can borrow as a government to do it, and you can hand that money over to councils or build it on your own behalf. And that's what both governments have chosen not to do to the extent that they need to, given our population growth. And this week we heard from Chris Bishop that, again, he is also not going to use the Crown's balance sheet, not going to borrow using the Crown's low borrowing costs and its AA credit rating, and it wants PPPs, public-private partnerships, funded by private funding to do it. The problem there, of course, is that it won't happen at the speed and scale that's necessary, simply because the costs of funds for those private funders is about double that of the government. Also, the government wants to use so-called demand management to reduce the amount of infrastructure that we have to build. And what they're talking about there, of course, is user charges, tolls, water charges. Now that's sensible and starts to put the cost of this new infrastructure onto those people who use it. But if you're going to be serious, you need to be doing things like land value capture. So the people who see their land values increase sharply when a new motorway goes past, and we saw that to the tune of billions with Transmission Gully, for example, that they help pay for those costs. And when you also look at how quickly these things are being done, basically, Chris Bishop is saying, I want the private sector to pay for it and for individual users to pay for it. That means it won't happen because the private sector can't fund the amount necessary. And politically, surprise, surprise, people don't like paying tolls. And we've got backlashes, of course, in the Tararuas and in Whangaparāoa Peninsula with Penlink. So what's going to happen, I think, here is that at some time next year, there's going to be a blow up within the National Caucus about road user charges. The government's pushing ahead with motorways, but of course, if it's going to, as Simeon Brown again reiterated this week at the Select Committee hearings, if it's going to be um, uh, toll funded for everything, it's just not going to happen. And then finally, we got some information from Stats NZ, details from the census. They're coming out, being drip fed, showing that homelessness in New Zealand in the last 5 years between the 2018 census and the 2023 census worsened dramatically, including rough sleeping, sleeping in boarding homes and tents and marae, increased 60% to nearly 20,000 in 2023. We have a housing crisis because we won't invest in infrastructure, because we won't use the Crown's balance sheet, because frankly, it works to have shortages of residential land and housing for those people who make tax free capital gains on leveraged residential land prices. And I don't think that's going to change until we start taxing capital gains or wealth. In my view, it should be a land tax and increasing incentives to invest in real businesses, as they do everywhere else in the world. I'm Bernard Hickey. That was this week's Saturday Soliloquy for December the 7th. Ka kite anō.